What is going on, guys? Welcome back to Zero to a Funded. Today is day 7 or 8, I want to say. I don't know. I've started to lose track, but today, guys, we are going to be talking about using multiple time frames in, I guess, coordinates with each other. I don't know if that's the right word, but pretty much using multiple time frames together to really solidify a bias within the day or, just to look for an entry. Pretty much what I have realized actually that my strategy is using basically a couple different time frames together to really give myself a good idea for my daily outlook. For example, today I wanted to see an expansionary move up right around in this area right here, and I actually entered a long right here, and I had my stop loss at this low, and I was targeting a 2-to-1 RR like so. Now unfortunately I did take profit around here and then got stopped out at break even before we started making this expansionary move up, which is ultimately what I wanted to see. And as you can see, that full take profit actually did end up getting hit. Now, how I came to this confluence and how I had this outlook that today I wanted to see an expansionary move to the upside is exactly what I'm going to go over today, and that is by using multiple time frames together. Now, time frames, you can look at all of them and it's easy to think that they are going to be each their own separate thing, right? And depending on the way you trade, maybe you only stick to one time frame, and if you do, that's totally fine. But the way that I trade and the way that I'm going to teach you guys how to trade is by using them together as opposed to their each individual thing, because at the end of the day, they actually are tied together, right? As we went over in episode 2 or 3, I think it was, we went over exactly what a time frame is, that every single time frame, whatever I select here, is what each candle is going to be representative of. So for example, right now I'm on the 5-minute time frame. Each one of these candles represents 5 minutes worth of price movement. Market opened right here at this red line that I have drawn out right here. That's going to be 9:30 a.m. Eastern. My trading window personally is from 9:30 a.m. Eastern to 11:30 a.m., which is right there. That is my window to actually execute a trade. Now, on the 5-minute time frame, it actually doesn't look like that big of a window. But if I zoom into the 3-minute time frame, it looks a pretty much decent amount bigger. Look how many more candles we have. Now, the 3-minute time frame is the main time frame that I personally focus on. If I zoom in even more to the 2-minute or even the 1-minute, you can see how much bigger that range gets. I want you guys to imagine looking at the chart. Basically, it's like you almost have a microscope, right? Or a magnifying glass, right? And let's just say you're on the 1-hour time frame, and this is a perfect example, just looking in between these two red lines. In between these two red lines on the 1-hour time frame, we only have 1, 2, 3 candles. But if I zoom into the 30-minute time frame, we now have 1, 2, 3, 4, 5. If I zoom into the 15-minute time frame, we now have some more. So it's like slowly as I go down the interval of time frames, I'm going to be able to look at price more precisely, right? Right now we're on the 5-minute. If I go down to the 3-minute, as I was saying earlier, and then the 2-minute, and then even the 1-minute, we are going to be able to get an exact clear depiction of what price was doing. Now, pretty much the way that I trade, we're going to get into we're going to start to dabble into my strategy as well, is as follows. What I'm doing is pretty much coming into market open. If I replay back to right here, I can see that we had an initial move up. We retrace back into these lows, and then I am looking for a move up. I'm looking for a move up. One, I'm looking for us to hold this area down here. You can see, once again, this is tying into what I said or was going over in yesterday's episode, which was, our introduction to supply and demand zones. We have this low right here that was held here, 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 here. Boom again, right there and right there. So we come up, we have this initial retest, and then I'm looking for a strong bullish indication. Now, once again, rejecting out of this zone and then also going into what we went ahead and talked about in our introduction to price action reading, we can see that buyers instantly came in and basically said, fuck you to all these sellers that pushed this thing down. We came all the way up here, wicked above that high of that pullback candle, and then had a very strong close. And that's actually where I could have entered a long setup and where I actually wanted to enter a long setup this morning, but we actually had high impact news coming out at 10 o'clock. So I actually did not go ahead and enter that trade. But that thing would have ended up hitting take profit, which was right there, right? But what I want you guys to focus on, I don't want to go over that specifically today. What I want to go over is what I was also looking at before I got into this trade. Now, obviously, I just have a lot of market experience, so I don't do this as much. I mean, I still do, but I can tell already what the 2-minute and 1-minute time frame are going to look like just by looking at this chart. If I go on to the 2-minute, I can see even more clearly an exact depiction of how price moved. We had this initial move up, and then we had a very, very strong push down, as you can see represented by these 2-minute candles. So basically, these candles right here, or even if I go on to the 1-minute, these 1, 2, 3 candles right here represent this one very strong push down. Now, if I wanted to see actually how strong this candle was, even not just by looking at that it was nearly a full body of red, I could go onto the 1-minute time frame and actually go ahead and see that this push down was very, very strong starting from right here, as these 3 candles right here are all very bearish. But then as soon as we started to see that rejection by buyers, I then wanted to go ahead and look for a long setup. As if I also went ahead and flipped out to the 5-minute time frame, I could see that we started to create this uptrend as we broke above these highs after rejecting out of this low. And then look how strong that 5-minute candle is right there. Once again, talking about our wicks and bodies. Once again, look how big that bottom wick is. And not only is it that big, but it's also rejecting out of this area that we have held multiple times during the pre-market session. And you could even say over here as well from last night. Right now, on the very high time frames, you could zoom out as far as the 4-hour time frame, and on there, it looks like we actually are still in an uptrend as well, I would say. But depending on what time frame you're on, things are going to look a little different. But I want you guys to realize that all time frames can kind of go hand in hand, and they are not really, they're each individual thing, and using them together can be very, very useful. And the more experience you have, you will pretty much be able to tell what the other timeframes are going to look like just by looking at one of them. Now that we've gone over that, we're going to dive deeper into price action reading. Now, pretty much the way that I trade is just by reading price action. So right here, what can I notice? Like what we just went over, strong push down, buyers instantly pushed us back up. Let's see what happens. We make an expansionary move up, right? Oop, I did not mean to do that right there. Now, right here, I'm going to show you guys the second entry I actually went ahead and took today. I didn't take that one because there was news coming out. The second entry that I took was actually right here. Now, why did I take this setup? Well, one, we have this low right here. That is an intraday level. Sometimes I mark out intraday levels. If I go out onto the 1-minute, we can see that this was a very strong area that was respected right here. You could even extend this box to all the way just like that. Right? So this is the 1-minute time frame. Right here, after breaking above these highs, I was very bullish. And as you can see, just by looking at price action, you can see how strong that price was. Sellers tried to push us down once again right here, once we came up and broke above these highs. But look at how big that bottom wick is, and then look at this candle right here. One, not only is that a huge bottom wick on the 3-minute time frame, but look at that body close. Look at the 1-minute. We can see here even more clearly that buyers really started to step up once we got into this area. And you can see how strongly after that push down, we started to show that strength. 2-minute, once again, look at those bottom wicks. You see how I'm flipping through each and every time frame. 5-minute, again, this candle right here, very bearish, but then right after, buyers take control back over. Back onto the 3-minute time frame. What I always do is wait for a pullback and then bullish confirmation with a wick above a previous candle pullback, which is right there. Now, I know that probably sounded very confusing, but we're going to get more in depth into my strategy tomorrow. But for now, we're just going to be going deeper into price action and utilizing multiple time frames. I actually took my second entry right here with my entry right here and my stop loss at this previous low. I always target a 1-to-1 and a 2-to-1 for my take profit levels. This thing ended up getting stopped out instantly, unfortunately. Which ties in to my next subject, which is getting stopped out on good trades. Now, that trade right there followed every single one of my rules and got stopped out instantly, and I felt no remorse for taking it. I wasn't mad at myself. I stayed disciplined, and I followed all my rules. And yes, I got stopped out, but the losses happened. And tying all of this together into psychology, hopefully you guys can see slowly as this series progresses how much everything is starting to tie together. I want you guys to recognize that in trading, there's going to be times where you do everything right. You follow your setup, you follow your rules, you follow the whole outline that you have planned for yourself, and you stay emotionally in check, and you are still going to take losses. And there's nothing you can do about that. No trader has a 100% win rate. Not one. Not one single person out there wins 100% of the time. Losses are inevitable. when you take these losses, you have to realize that they just can't mean anything to you. And on the flip side, the wins can't really mean anything to you either. This ties back into what I was saying the other day about being emotionally connected to the money. The money, even though, it feels very real and you're very emotionally tied to it, you really need to get over this fact of, I'm trying to make money. If you are relying on trading to make money or as a source of income, you are instantly going to put yourself at a huge disadvantage, because you are going to have this mindset, in your head where you need to make money. And showing up to the charts every day with this kind of thing in the back of your mind saying you need to make money from this is actually only going to hurt you in the end. As a lot of other business models, if you were very hungry or not in the best financial situation and you started, some kind of other, more traditional business, let's say, for example, maybe like a car detailing business, and you were hungry, the more work you put in, the more you would get out. Now, I've said it again. I've said it before. I'll say it again. Trading is hard because the more work that you put in doesn't necessarily really equal the amount of results that you get out. And it's a very hard concept to grasp. And I ended down on the day a couple $100 of real money. Some people, when they take losses like these, right, who are way, bigger size than me, are losing tens upon thousands of dollars per day. But it is they are emotionally disconnected from it. They'll go about the rest of their day, and you would have never known that in the morning they lost $5,000, right? And this is the mindset of a trader that you will learn to have, as you learn and as you go out through trading. Guys, one thing I really would like you to do right now is like this video. If you couldn't hit that subscribe button, it would really mean a lot to me if you aren't subscribed already. But also, most importantly, I want you guys to drop a comment on any questions you have, because I think next episode we're going to do a little bit of a Q&A. There's a lot of questions that have built up in my DMs, in my YouTube comments, and everything like that. My DMs on Instagram, even Discord, everything like that. So I want to do a big Q&A answering a lot of your guys' questions. A lot of you guys actually had some great questions that I think would be very beneficial to go over in the series. And I think making a whole episode dedicated to just them would be very beneficial. And that's what I plan on doing tomorrow. But with that being said, guys, that's going to wrap up this video. I want you to go ahead and go back on TradingView and just look at multiple time frames. And I want you to go, say on the 5-minute time frame, for example, look at something like this, or just pick really any random section of price. And I want you to look at it, and I want you to try and picture how these smaller time frames look, or how the chart is going to look once you zoom in a little bit. And then I want you to actually go down to the smaller time frame. I want you to actually see how it looks and see if you are right. So right here, let's just take this area, for example, right here. And I'm on the 3-minute right now. Then we'll go on the 2-minute. And I want you to look at this 2-minute chart, and I want you to imagine how the 1-minute chart looks, right? Let's just say, let's even pick out a more specific area right here. Let's pick out this 1-minute dump right here. I want to picture what this 1-minute dump looks like. I'm going to say that this 1-minute dump was very, very strong, and we're just going to see probably about 6 very bearish candles in a row, because we can see how bearish these ones were here on the 2-minute time frame. And we can see that right there. We can see right here that there actually was a little bit of a pullback within that, move down. So that's another thing that using multiple time frames as one will really help you with. Right here on the bigger time frames of the 2 and the 3, I wasn't really able to see that there was that pullback. I could see it right here that we had this little bit of a bottom wick, but it's not as clear as if I was to go out into the 1-minute. And then I can see it a lot more clearly right there. And that little move up right there was what that bottom wick was on the 2-minute. So hopefully you can see how all the time frames kind of coordinate or coincide together, or coexist together, I should say. That's it for this episode, guys. I know it wasn't really too in deep, but next episode, I want to do that Q&A, and then the next episode after that, I want to get into actually creating your own strategy, which I know is what everyone really has been waiting for, and we're going to get into more actually, executing trades, executing entries, and actually creating your own strategy so that you can actually trade and know exactly what to look for, right? But for now, we're just getting all that foundational stuff out of the way. So bear with me through the boring stuff before we get into the stuff that you are all here for. That's going to wrap up this one, guys. I love you so much, and I'll see you tomorrow for the episode, whatever it is. I want to say 9. I'm going to go with 9. Hopefully that's right. Later, guys.